Wall Street is pouring billions into the usual AI suspects like Nvidia and Microsoft, but what if they're missing the real story? Many investors feel the easy money in those big names has been made, with valuations in the trillions. They're all hunting for the next undiscovered company set to explode, but they might be looking in the wrong place. The true game changer isn't just the AI brains, the models themselves. It's the critical infrastructure bringing them to life. There's a hidden nervous system inside every AI data center, and the company building it is quietly cornering the market. In this video, we're pulling back the curtain on a hidden gem AI stock that's trading at a discount to its future potential and could be your next 10 times investment. Astera Labs. So what is Astera Labs and why does it matter? So who is Astera Labs? Simply put, they provide the essential plumbing for the AI revolution. Think of it this way. If an AI data center is a city and the GPU chips are skyscrapers, Astera Labs builds the superhighways connecting everything. Without their tech, data gets stuck in massive traffic jams, grinding the whole system to a halt. Astera is a fabless semiconductor company, meaning they focus on brilliant chip design and let other companies handle the expensive manufacturing. They create purpose-built connectivity hardware for AI and cloud infrastructure. Their products solve the critical data bottlenecks, ensuring powerful chips from companies like Nvidia can talk to each other instantly. This isn't a luxury, it's mission-critical. All the processing power in the world is useless if chips can't communicate at lightning speed. Astera solves this exact problem, which is why its technology is already a key component in AI servers. They aren't just riding the AI wave, they are a fundamental enabler of it. It's a classic picks and shovels play. While everyone is rushing to find gold, Astera is selling the essential tools needed to dig. A great story is one thing, but what about the numbers? This is where it gets interesting. Astera Labs isn't just a company with a cool idea, it's a company that is executing flawlessly. For the full year of 2024, the company brought in a record $396.3 million in revenue, but the growth since has been stunning. In the third quarter of fiscal 2025, Astera reported a record-breaking quarterly revenue of $230.6 million. That's a 20% jump from the previous quarter and a stunning 104% increase compared to the same time last year. And they're not just meeting expectations, they're blowing them out of the water. That $230.6 million figure crushed analyst estimates, and their adjusted earnings per share of 0.49 beat the consensus of 0.39. This was the fourth quarter in a row they've smashed earnings estimates. But this isn't a growth at all costs story. This is profitable growth. In that same third quarter, Astera posted a GAAP net income of $91.1 million. That's a massive swing from a $7.6 million loss in the same quarter a year ago, a 1,300% turnaround. The company is scaling beautifully, hitting a record non-GAAP operating margin of over 41%. And they don't see things slowing down, with their forecast for the next quarter once again pointing ahead of Wall Street's optimistic targets. If you're finding this analysis valuable and want more insights on under-the-radar AI stocks, hit that subscribe button and ring the notification bell. You're not going to want to miss what's coming next. The big question is it trading at a discount? With numbers like that, you're probably thinking the stock must be ridiculously expensive. So, is it really trading at a discount? At first glance, the bears have a point. The stock doesn't look cheap. Its price-to-earnings ratio has been high, sitting well over 100 times trailing earnings, and traditional valuation models might call it overvalued. That's the bear case, and it's fair. It suggests immense future growth is already priced in. But this is where you have to think about tomorrow. The discount isn't about where the stock is now, but where it's headed. Old-school valuation metrics often fail with hyper-growth companies at the dawn of a new tech era. So, what do analysts think? Across Wall Street, the consensus rating is a moderate buy or strong buy. Average one-year price targets are hovering in the range of $187 to $207, suggesting solid potential upside from where it's been trading. Some on the street are even more bullish, with high-end price targets hitting $275. When a company is growing revenue by over 100% year over year, the discount isn't in today's P/E ratio. The discount is the gap between its current valuation and the multi-trillion-dollar AI infrastructure market it's just starting to conquer. So, how could Astera possibly 10 times from here? The path is clearer than you might think, resting on four key pillars. First, the market size is mind-boggling. Some estimates project the AI infrastructure market will grow to nearly $400 billion by 2030. Astera provides a non-negotiable part of this build-out, effectively acting as a toll booth operator on the AI superhighway. Second is the growth engine. The company is already growing revenue over 100%. To 10 times, it doesn't even have to maintain that pace. If Astera sustains a 50% annual growth rate over the next 5 to 7 years, its revenue would swell from hundreds of millions into the multi-billions, easily justifying a much higher market cap. Third, expanding profits. Astera's fabless model has incredible leverage. As revenue scales, a larger chunk of every dollar drops to the bottom line. We're already seeing this with gross margins holding strong around 76% and operating margins turning powerfully positive. And fourth, market recognition. That recent dip after misplaced panic about competition from NVIDIA's NVLink? Analysts largely called it an overreaction and a buying opportunity, since Astera is a key partner in the NVLink ecosystem. As Astera keeps executing, the market will likely reward it with a higher valuation multiple, just like other top-tier semiconductor giants. Combine a colossal market, blistering growth, expanding margins, and a re-rating from Wall Street, and a 10 times return moves from fantasy to a real possibility. No investment is a sure thing, so we have to talk about the risks. First, and this is the big one, execution. The entire bull case hinges on the company firing on all cylinders. The stock is priced for success, so any major slip-up could cause a sharp correction. Second, the valuation. Because it carries high expectations, the stock could get punished if it fails to meet them, even for a single quarter. Third is customer concentration. A huge chunk of Astera's revenue comes from a small number of giant cloud companies. Losing a key customer or seeing them cut back on orders would hurt their numbers. And finally, competition. This is a profitable space, attracting sharks like Broadcom and Marvel. While Astera has a head start, it must keep innovating to stay ahead. And the semiconductor industry is notoriously cyclical. A broad downturn in AI spending would impact everyone, including Astera. So, where does that leave us? Astera Labs is a classic high-risk, high-reward opportunity, a pure-play bet on the picks and shovels building the entire AI infrastructure. The bull case is clear: explosive, profitable growth, essential technology, a massive market, and a strong vote of confidence from Wall Street. The bear case is just as straightforward. The premium valuation demands perfection, and there are real risks from customer concentration and fierce competition. Astera Labs isn't a stock for the faint of heart or a get-rich-quick play. But for those with a higher risk tolerance and a long-term horizon of 5 years or more, it represents a rare chance to invest in the foundation of the AI revolution. It's a company that could absolutely grow into a dominant force in its industry. While most people are chasing headlines, the biggest returns are often found by looking where others aren't. The only question is, are you willing to look? What are your thoughts on Astera Labs? Is it the next 10x AI stock or a valuation trap? Drop your opinion in the comments below. And if you enjoyed this breakdown, don't forget to subscribe and check out this next video on another potential AI winner.